Hey everyone, in this video I wanted to answer which is the better growth stock to buy, Upstart or Redfin. To answer that question, I'm going to look at revenue, I'm going to look at profits, I'm going to look at shareholder dilution, and I'm going to look at valuation. So let's jump right in, starting with revenue. And interestingly, we see a similar trend line here for Upstart and Redfin, even though they're in arguably different industries. Redfin, the digital real estate company, saw revenue growing for several years before falling as the real estate industry has taken a back seat now that mortgage rates have soared and the amount of inventory for sale has declined. Similarly, Upstart saw its revenue growing as lending fueled by its AI decision making was increasing, and then it started to decline as lenders started to fear for a recession. And one of the areas they wanted to pull back on if they're afraid of a recession is lending from newer methods that have not been proven yet through a recessionary cycle. So each Redfin and Upstart are facing near-term headwinds. However, longer term, I think each of them have excellent growth prospects. They're both operating in massive industries with innovative technology that could fuel growth for a decade or more. So it's an interesting scenario that Redfin and Upstart find themselves in. The next thing I wanted to look at is their profitability, and Redfin was doing a nice job, increasing its profitability, turning positive for a brief moment, and then really taking a hit as the real estate industry took a hit, reaching negative 240 million. Same story for Upstart, but even more explicitly. So look at that growth in profitability as their revenue was growing. Things were looking great for Upstart, and then the big collapse as lenders pulled back on their platform, reduced the amount they were willing to lend, and that really hurt the company because now they couldn't match the potential borrowers with lenders. So they had to take drastic measures to try and find a way to bring that supply of lending on the platform or funding on the platform. They found some workarounds. It's not perfect, but they found a workaround that temporarily will plug the gap. But longer term, they really need to find sustainable sources of lending on its platform so that they don't have to use their own capital to lend the money on the platform, because that will change the business model from just being a platform that brings together borrowers and lenders to a platform where Upstart is doing the loans. And so it's a different business model. That would be a riskier business model, and the valuation would be reflecting that change in risk. The next thing I wanted to look at is average diluted shares outstanding. And what this measures is how many shares of stock the company has outstanding and how much are they increasing this. So with an increase in shares outstanding, that has the potential to dilute shareholders. And when or if the companies become profitable again, those profits will have to be shared among more shares. And so earnings per share will decrease as a result of an increase in shares. So this is an important metric I look at sometimes with fast growing companies that are losing money on the bottom line. And in this regard, Redfin is diluting shareholders more aggressively than Upstart. Upstart actually did some share buybacks to reduce the shares outstanding. And so Redfin is diluting shareholders more so than Upstart. And finally, I wanted to look at valuation, and I chose to use the forward price to sales ratio. And looking at this metric, Upstart is significantly more expensive at a forward price to sales of 3.1 compared to a forward price to sales of 0.8 for Redfin. Now, if I had to pick between one of these two stocks to buy today, I would pick Redfin. I do think Upstart is the better company. It demonstrated how explosively its profits can grow and net income can increase with the rise in revenue. Although I don't believe that Upstart deserves this much of a premium compared to Redfin. A little bit, yes, a price to sales difference of, if it was trading at around a price to sales of 1.6 to 2.0, I would say yes, I would go with Upstart, but a price to sales of 3.1 is a little bit too much of a premium for me to pay in excess of Redfin, and so I would pick Redfin.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.